I do believe you're probably playing that through your speakers. That's okay.
Oh, I didn't check the box.
Oh, no, I didn't check the box. Jesus.
Trade confirmation, right? Last minute, you always got to look at that box and check it. Welcome out. We are here live on YouTube, Tackle Trading's Halftime Report. We've got Noah, we've got Cody, we've got Tim here, and we got a great show here for you. Markets are selling here this morning. We'll get down to it. First off, how you doing this morning, Noah?
I'm fantastic.
Good. Cody, young man, I know we've got some volatility going in the market. We're going to talk about it one step at a time as we break things down. Let's start with the S&P 500. Noah, give me a read on this technically before we get into the news behind it. Sell off yesterday after the Fed. We got a big fat red candle on some increase in volume, but not exactly like crazy volume. I mean, we're still in an uptrend above the 20, below the 9 now. You've got a little bit more complex chart here. What's your read, Noah?
Wow, it's pretty much everything you just said, Tim. Like you nailed it, like right on top. Like it's volume was typical. You know, it wasn't crazy yesterday. Got a big engulfing bear. I know a lot of bears out there are probably hopeful that this is gonna, keep coming down. It might not though. 2,900 is a big fat number. It's a big support zone, a lot of volume. It's hovering around that 20-period moving average. And, it might end up being a pullback like the last one where it's big engulfing candle like this, may chop for a few days and then recover. We got the jobs report tomorrow?
We do. Yep.
Yeah. And so I'm not sure if that's enough of a, catalyst to change market sentiment. I could see also, Tim, where it could lead to a big sell-off if you start to see some institutions come in, if it starts triggering stops. But I don't know if we'll see that unless it breaks 2,900 here.
We're not getting massive carry through here today. There is some strength, there's some weakness. We're going to go through the individual components, but go down to an intraday chart, if you will, here, Noah. It's got a momentum feel to it that it's changing, right? Yep. And a lot of that came after post-Fed. Now, Cody, I know you dug a lot into this because we were talking about it in pre-production. Powell was talking about no more rate cuts this year, that the dollar actually responded very, very good to that. Obviously, you trade a lot of Forex. What was your reaction to the Fed and the Fed statement, Cody?
So my reaction right away was he did come out and start sounding hawkish. So he was saying how the economy is doing well. It's not hyper extended or anything of that sort. He made the statement of how after the last recession, rates were brought to zero. He said that was an extreme solution to help the economy recover, but it stayed at zero for too long. And then he said that it's unhealthy for the economy to stay at such low rates. And then he believes right now we're still below the normalization rate. So that kind of language indicates that they're going to be hawkish, and they're actually leaning more towards another hike or maintaining rather than a cut. So the language that came out of the Fed was hawkish, which strengthens the dollar.
Noah, the market should like the idea of no more rate hikes, but they did not like the idea that there was no more rate cuts. Do we have a pretty spoiled market at this point?
Spoiled or dependent? Not sure which way that goes. I mean, it's been addicted to the low rate, easy money policy. So I think it expects it at this point in time.
Yeah.
And I actually watching it, I didn't really take as much hawkishness out of it. Like I was, just in my interpretation of it, it sounded more of like stay the same is kind of what I took away from it.
Well, quite frankly, I think that the fact that it just wasn't so dovish kind of by default makes it a little bit hawkish, but I'm with you. I did not read hawkish sentiment. It's not like Powell's going to go out there and raise interest rates. In fact, the quote I got, no more rate cuts. I mean, that tells me the headline right there. The market can get down to business. And by the way, we're going to have a stock picker's market. Volatility is normal. Going up 0.5% every day, all day long, for the entire month is not normal. So the fact that we've got a couple of days of red candles and pullbacks, it's a really, really good thing for the market, in my personal opinion. I know if you're on the long side, you got stopped out. That's your take. I probably didn't like that, but the reality is, no, we like volatility. It's going to set up for our Theta Thursday as well, because with increasing volatility, there's usually a little bit more credit. Go back to a weekly chart, if you would. Let's talk big picture on the S&P for a minute. we are getting through earnings season. It is 5/2/2019, and we're at an all-time high. We did tip the all-time high this week here, Noah, but we couldn't hold it. You've got a weird kind of triple top pattern in many, many regards. And now we're heading into May. Famously, the sell in May and go away. Bruno in our clubhouse did comment that the last 6 years in a row, the market's gone up in the summer. So be cautious about that with seasonality. What's your read as we're heading into the summer, Noah? You said in the chat yesterday, summer is for theta, right?
Yeah.
Is that still your take?
Summer is for theta. The whole sell in May mantra goes way, way back, Tim. I can't remember what book I read it in, but they explained some of the emphasis behind the saying goes back to when people would go on vacation for the summer and, be off working on the farm, and market volume dipped because of the just lack of technology. It's not the same as it is now, but the patterns have held true. The end of May, sometime in June, usually you see a big sell-off, but then July rallies. So, and then August, September, usually choppy sideways. And then if you do see a sell-off, a big one, it comes somewhere around September, October. But by October 15th, the market's usually poised for that fourth quarter bullishness. So this year with the market testing that all-time high, I'm not going to be surprised if we're talking about new highs in 2 weeks. But where it is at that all-time high, I can see where people would be leery. It hasn't broken through that before. And it's not beyond my imagination to see a sell-off where it dips down a bit, a little bit bigger.
Yeah, it's going to be interesting. Tomorrow I got to set my rating for our tackle trading scouting report meeting. And to me, we're still above moving averages, but we've got caution. I might be pulling that thing back just a few. I mean, even with just today's volatility. Now, we're a long shot away from that. The market's only down 0.38% for heck's sake, right? It's not like we're having a massive sell-off. C'est la vie. Take it one step at a time. Let's take some corporate news here today, Noah. Qualcomm had earnings, QCOM, if you would. And this stock has obviously been in the news, been a juggernaut recently, back on the daily chart and kind of talking about it. But this is a momentum changer here. It's holding the green candle, which is good. It was a high base. It wanted to break out. The market sell-off here intraday has brought Qualcomm back to the old resistance point. What's your read on this technically?
Technically, that last candle is a kind of a shooting star. It's got slowing momentum. Your volume's dropping. You're starting to see an uptick in the volume here with the last two candles, and some of that's buying, but some of that's also selling pressure. After a ripping rocket move like that, I start to really suspect a revision to the mean. I expect a pullback towards at least 85, maybe 80. After profit taking is really the motivation there. There's people made a lot of money on this. They want to keep it. If it starts to dip back, it'll start to hit trail stops.
Yeah, I agree with that. Obviously, the candle right now looks ugly, and that's what you would call a shooting star. Is that right?
There's so many different names for candles. We could probably come up with a bunch of them. I've heard that referred to as a chandelier pattern.
Johnny was a schoolboy. That
one, you can see that. It's inverted hammer-esque.
For sure.
Long upper shadow is all, it's long upper shadow. And again, in the context of having slowed down and just near that big fat 90 number.
Yeah. A bunch of other companies had earnings here. A lot of insurance companies, MetLife, Prudential, Allstate. We're not looking at them. Bore me to death here today. I will tell you, though, Marathon Oil is tradable down 5%. The oil market has been volatile. MRO, more of a smaller, kind of company, what we would technically define large cap at $14 billion, but not like that big multi-$100 billion company. Obviously, a reaction like this, Noah, that changes the whole trend here.
Yeah, that's a violation of trend. Clearly, like if I were to draw a trend line up that, I didn't want to draw a fib. I didn't even know I had the fib on there.
Yeah.
There we go. Try that again. If you draw a trend line up here with something we were talking about in the lounge, that's even a little suspect trend line. I'm just making that up. But it's violated that channel. And that's a big, big, big selling pressure. It's broken one or two, levels of major support. It's down below that 1630 number. It's starting to get range down, which typically when you see this, it may rally back up and give you that kiss goodbye retest, or end up coming off the backside of a trend line. But that's you go with the chart with the moving averages on it, and they're all crossed over. Let's go back to the daily here, and this is where you start to see all that crossover action occur on the moving averages. So that's a big sentiment changer, absolutely.
Yeah. Other companies grabbing my eye here. Owens, Illinois, OI, gapping below support on earnings, $18 stock. Pretty liquid, though, actually very tradable in that regard. An earnings gap. I mean, you can play those as momentum plays. It's a non-traditional pattern. It's not like your traditional bull retracement with a pivot and a trigger, right? You've got to play that candle in the intraday, kind of an advanced chart, in my opinion, but it is gapping down. Give me a quick read.
Big gap down. Massive increase in volume on the earnings miss there. Broke a couple key levels of support. That 18, 80, 18, 16 zone. A lot of downward movement. You get initial kind of intraday cap bounce there. Dead cat bounce, just kind of recovering some of that. Bam, out here on the weekly, 18 even's a big number. It's been support, it's been resistance. It's something that may hold. It got below that 200 period moving average as well.
Yeah, I agree with that. Take a look at Whole Logics. Really interesting. HOLX, if you would.
HOLX. That is not a stock I have looked at. HOLX.
I got to tell you, this is a beautiful head and shoulders reversal breakdown, coming back with a kiss goodbye pattern, Noah. I know it's a very early part of the trend to identify that, but those green candles rallying back. Now we're post earnings on a red candle in confirmation. You could take a picture of that and put it in a textbook, my friend.
But wait, there's more. Okay. If you like this chart pattern now, wait till you see this. It's going to be a fractal. This is going to be a perfect example. You come down and look at the smaller time frame intraday, and we are going to see almost the exact same pattern you see on the daily chart down on the intraday chart.
Cody, get that chart pattern on Twitter. That one's a beautiful one. I love that one.
Did I not see it? Look at that. Isn't that it? Head and shoulders,
Absolutely.
breakdown, retrace, kiss goodbye.
Yeah.
That I'm a multiple time frame wizard.
I love it. First of all, multiple time frames is a very important part of any technician's skill set. There's no question about it. When you go down into an intraday, Noah, I noticed that you go to the 15-minute by default a lot of times. And I also know that you do like a 5 and a 60 and a 30. Why do you like the 15-minute?
Because I get hyperactive on a 5.
Yeah, kind of smooths things out, but it's enough short time. I got you. That makes sense.
There's a point in my trading, Tim, where I was down on tick charts, minute charts, and it was an exercise in insanity. And now I rarely look at the 5. I usually stop at the 15. So because otherwise I'm forcing myself into a hyper day trading mentality, and I'm no longer a day trader.
I see. Yeah, for sure. And you got to stay in your lane. You got to know who you are and how you're going to approach the market day by day by day. And even within the intraday, other earnings roundups, Dow DuPont missed, chemical company. They just recently split the company up, DWDP.
DWDP. Yeah.
Now coming all the way down into support. There you see the intraday very, very weak. Obviously an ugly candlestick. Materials in general are weak today. I see it in steel. I see it in oil. I see it across the board, materials and energy and all those types. Chemical company, one of the biggest in the world. Give me a read on that candle. And Noah is on mute. He is the multiple time frame wizard, but not the audio wizard today.
Well, I was multitasking.
Maybe the pinball wizard.
I was multitasking poorly. I was just trying to get the YouTube channel up live. So yeah, heavy sell off. Big support zone there at 34.80. That's tested 1, 2, 3, 4 times. So, but that's a lot of momentum, Tim, coming down into that. And to get it, that's what you come down in the intraday time frame. You do see a little slowdown, but that slowdown in that ballpark, you'll see some profit taking probably in a small revision would be my guess. It could blow right through it though, because that is a lot of momentum.
Yeah, a ton of momentum here. And obviously the sector and the industry is actually moving in that bearish direction as well. And I'll tell you, a bearish sector, and we've been talking about this for a long time here, Cigna, Noah, healthcare plans. And we've had conversations about healthcare plans and even this company many times on this halftime report. And by the way, before we dive too far into healthcare, and we're already 10, 15 minutes into the show here, welcome out, halftime crew. Theta Thursday. Today, Cody, we're going to be doing iron condors, a couple of them later in the show. We'll prep a few of them. Theta Thursday is a way for us to focus on one strategy, one technique, one idea. And it's always great to have you guys. If you're watching our show right now in the chat, just say halftime crew or hashtag team tackle and welcome us all out as well. Cigna, ugly candle here, Noah. It's an engulfing candle, and you've got a range on that candle above and below the previous candle on earnings with volume in a downtrend on moving averages. Is that confirmation right there for you?
That is confirmation. That is the same kind of breakdown retrace. Again, you see that breakdown retrace. You drop that down into the intraday time frame. There's your breakdown. It's kind of kiss goodbye area right now. So that little retracement, if it starts to head down again, you got another opportunity for confirmation intraday.
Mm-hmm.
But yeah, a bearish engulfing, in my opinion, is usually enough confirmation for me. I catch the next candle if I can't catch it intraday.
Yeah. ICE, not a company we look at all the time. The exchanges have been interesting. Now you've got an earnings reaction down here on a retracement, ICE, if you'll take a look at it. I actually kind of like this pullback right here, Noah, with that hammer candle.
Yeah, it's a high wave type candle with shadows on both sides, in a support zone of old candle high, minor resistance. I wouldn't call it a major resistance support zone. Rising moving average, staying above that 9-period moving average thus far. So, looking down intraday, you see it hitting the big support zone. It hasn't violated it yet.
Mm-hmm.
And, a little bit of lower trend starting for the last 2 days intraday, but may not be enough for confirmation yet. If you want to see it heading back up, I probably wouldn't be a buyer until it broke the high.
Yeah, I would agree with that. I'm looking through the rest of the market here. Give me a look at UAA, if you would.
UAA.
Under Armour, one of Matt's favorite brands. He's always wearing an Under Armour hoodie. Now, this thing, man, this morning, it was a beautiful gap out. It was going to run. It looked like it wanted to run up and hit that $25 mark. Intraday, we even saw some immediate buying probably from the amateurs who came in. But Noah, that is a reversal candle in the purest regard, all the way from the top to the bottom. And now we have 2 fat red candles in a row where the bulls just simply cannot win the day. Give me a breakdown of the anatomy of a candlestick and why that red candle, even though the stock is up. But guys, by the way, the stock is up 4.4% today, but it's a red candle. Kind of break that down if you would, Noah.
Up in a downward fashion. That's a dark cloud cover type candle. It's not textbook dark cloud cover because it's not below 50% of the previous candle, but that is just a lot of heavy selling. And so you do get the gap up on the earnings, but he immediately fills that gap. So you go look at that intraday and, whatever ground it gained overnight, it's given all the way back. Some selling sentiment. And again, at a big resistance zone. It's not like it hasn't been here before. This is what, the 5th retest?
Mm-hmm.
1, 2, 3, 4, 5 times testing. Now, is that enough? Could it break through? Yes. But after an earnings announcement where they lost some money, I don't think so. I don't have confidence in that.
Really interesting chart there. Move on to the Dow Jones Industrial. Let's keep breaking down the markets one step at a time here. Whoops. Thursday.
Typed in the wrong symbol for that. All right. This is one where the weekly chart, I think, is interesting. If we back that out and get the big picture, this is the triple top of the market. This one's very, very clean, very, very well defined, but it's going to be different this time, Tim. It's going to break through.
It's different this time. That is one of the fallacies that Christian talks about all the time in the newsletters. Obviously, it's going to be different this time is usually a bad way to think about it. Who knows? I mean, if it does break through, you run with it, right?
Right. No, that's the thing, is it's right up there. Wait for that confirmation on that. I mean, the Dow 30, the NASDAQ's been leading the market with the new high. The S&P broke. The Dow hasn't poked its head above that. And of all the indexes, I put the least weight on the Dow, but compared to the NASDAQ and the S&P, because it is just 30 stocks. But that's a big benchmark, and that's certainly worth paying attention to.
I'll give you 3 of the bullish charts, in my opinion, on the Dow. You tell me which one you would pick out of all 3 of them. Number 1 is McDonald's. I like the retracement on McDonald's.
I like that.
Yeah, McDonald's is looking pretty good in that regard. Home Depot, pay range retracement here, bullish pullback.
Yeah.
Little different, kind of on a trend line, a little deeper pullback. And then last one, JP Morgan. JP Morgan is a more aggressive trend line. It's been taken off. Feels like it wants to head to 120 at some point here. Hesitation. Out of those 3, which one you like?
I like them all. This is like trying to choose favorite children at this point in time. I think the Fed's policy, keeping rates up, actually benefits the banks rather than the rate cut. I think would hurt the banks. So I think the banks break out. So I like JP Morgan for that reason. Mickey D's, it's a pretty retracement. And then the Home Depot, I like I don't know if you saw it, you did mention it, Tim, but I don't know if everybody else noticed it. you were talking about the trend line in that trend zone ball.
Beautiful pivot. Yeah. Now we're not
Yeah.
quite exactly
Not
at
quite
that catalyst.
there, but it's not, and it's got this old big resistance kind of back in here that it's hanging out around. 199, $200 ballpark's a fat number. It's got a little slowing momentum. So on this one, I don't know. I want to see a better confirmation on it. And again, same with McDonald's. It's a pretty nice looking retracement, slowing down, but it may end up pulling deeper. So I like them all. I'm going to say the only one that's not falling right now is JP Morgan.
Yeah. Disney also is very interesting on the bull side. It's nowhere near a trigger, though, because you've had fat red candles. We've been talking about Disney on this takeoff. Now you got earnings coming up as well, which is going to throw a wrench into that. Now I'm going to give you a couple of bears on the Dow. And guys, if you're halftime crew, I'd love to hear your thoughts on it as well. So we had McDonald's, JP Morgan, and Home Depot. Out of those three on the bull side, which chart did you like the best? McDonald's, Home Depot, or JP Morgan? Let me know in the chat. If you had to pick one, which one would you pick? Now, on the bear side here, let's start with ExxonMobil. Noah, this tells you a lot about the energy leadership and the sell-off in crude oil. Exxon earnings, disappointed last week. It rolled over. Now the trend is weak, and you're breaking below support. Now you've got all kinds of old support that could hold it up, but that's not a very pretty chart, is it?
No, it's not. And I pull my bullish bias on energy in May and June. Like May to June, when I see the reversal signal, that's it for the year. I don't expect it seasonally to keep going up because we hit peak oil consumption in July and it gets priced in. And so it runs up in the spring. I'm almost always bullish on oil in the spring. And then I watch out for that topping pattern. And that is one. They had a miss, hard miss. So I think the price of oil rising recently has affected that. But I did see crude took a big drop, right?
Yeah, crude's down. We'll talk about that in a minute. Inventories are the highest they've been, I believe, in like 19 months, something like that. I read that in the inventories report. It's crazy. Supply goes up, price goes down. Economics 101. I mean, not all this stuff is rocket science. Exxon's looking pretty ugly there, but I'm not sure it can beat United Health with the bear retracement pivot. UNH in the healthcare space obviously has been, and we've been talking about this, guys. It has rallied. It has confirmed. It is now starting to move lower. That's a pretty ugly chart right there as well, Noah.
Well, yes, we talked about that this morning in the lounge. This was, I believe, if I'm not mistaken, wasn't this on our scouting report? So pretty good looking bear setup. That is a nice looking kiss goodbye pattern. It's right in line with the little downtrend. This is what I call like the technical confluence zone where you get like moving averages in there. Let's drop that back to the daily here. Falling moving averages, falling trend line, old support resistance zone, nice bear retracement, waning volume on the rally. That's a textbook picture. Take a picture, send it home.
Yeah, I agree with that. You're getting a lot of them across healthcare. And then Pfizer, a little bit different, obviously, with Pfizer versus United Health, drug manufacturers versus healthcare plans. They're both in healthcare, though. But PFE, if you would, PFE is obviously still kind of that same setup and pattern, earnings earlier in the week. If you had to pick one here, guys, United Health or Pfizer, what was the other one I had here, Noah? Bearish? ExxonMobil. If you had to pick one, what would the bearish pick be that you would have? No, give me a read on Pfizer. I think that UNH chart is much weaker than this one personally.
I like the UNH chart myself. This has got the same kiss goodbye, the rally up into the resistance zone. The volume is waning a bit. Again, moving average. There's your 20-period moving average. Small body candles showing us that slowing momentum. So when you take that down intraday, you're looking for the breakdown. Here's your double top out there at 41. So you'd need to see a break below 40.50 minimum to start taking bearish action. Some traders might want to see it take out that $40 zone.
Yeah. As I look across all these different ones, and obviously a lot of UNH in here, a lot of people are agreeing with that. JP Morgan, McDonald's, a lot of different answers on the bull side. So interesting. Not in on Pfizer and ExxonMobil. So you do the UNH one as well, Ilka. I gotcha. And let's move on to the NASDAQ, if you would here. NASDAQ 100. Relatively a little bit weaker than the others. Now on the daily chart, Noah, that's just a pullback. I mean, I don't want to overblow this thing. Markets are still in a long-term uptrend. We've gone from 5,800 to 78 and to 79 at the top in that run. But it's the first pullback we've really had of any substance in about a month and a half. The candles in the last 5 or 6, we've had more red candles than green. What's your read on the technicals on the NASDAQ?
That's that support resistance zone. I was very interested in this this morning, kind of coming into that, watching that support zone. It's been the index leading the market with the strongest new high. So this little pullback can feel like a retest, but it's also really, really well kind of in that bottom of the channel, Tim. If you look at this from a channeling perspective, that's a well-behaved channel. And it's near the bottom of the channel. I don't know that the bears have any real teeth or claws yet. They might, but this could be a simple buy the dip where it's down for a few days like it was last time, down for a few days like it was last time, and it just rallies out.
Yeah, but it's always day by day, right? I mean, that's the nature of the market. That's the beauty of the market. That's why we do it in the halftime report. You're never going to have a sell-off until you have that first red candle.
Right. It's got to shift and it's immediately stokes fear, which then leads to more selling. So it usually takes that big hairy candle to really shift the market's mindset. And, my ability to predict the future is really worse. It's probably no better than the local weatherman's.
Yeah.
My 5-day forecast is a little hazy. My 1-day forecast is not terrible.
Yeah. I've got a 5-hour forecast of what I'm going to do this afternoon, but that might even change. Noah, who the heck knows? We don't know the future, which is why we always say trade our plan, right? Yep. The market does adjust and evolve day by day. And as a trader, you have to have a daily routine where you come in, you let your stop losses work, you let your targets work, but you trade our plan, right? And that's where that step system, stop, target, entry, and position sizing is so important. And it has to fit in the larger context of portfolio design as well. In the chat here, guys, I want you to type in, I will trade my plan. Tackle traders, we keep emotion out. We're trading assassins, we're trading ninjas, whatever, acronym or noun you want to use there. We have to execute our trade without emotion and just trade our simple plan. There's no doubt about it. NQ, though, there is some weakness across some of the major ones. I got to start with Google here, Noah. 1150 is key for Google. Okay.
Google.
Yeah, either the GOOG or the L, either one's fine. Earnings miss obviously threw some questions into the stock, but now you're at a battle zone that was a key level. When it broke out, it was key. When it retraced, it was key. Historically, over the last year, 1150, 1160 in here, Noah, these zones, I got to tell you, it's got to hold here if you're a bull on Google. There's no doubt about it.
Oh, yeah, absolutely. If we see it break down that, it's violated the channel. Broken a few levels of support, small technical levels. This is a big level. Below that, I think your next stop's 1100. So volume's dropping a little bit. You'd want to see a reversal on that. Maybe a couple bullish candles in there. I wouldn't really consider buying it unless it started to fill the gap.
But I wouldn't consider selling it either. In a situation like this, for me, when you're at a key level, until you get more confirmation, it's just moving it neutral, because that's an earnings gap, right? You have a strong market in general, kind of more of a neutral condition, could be a double calendar spread type candidate, maybe even an iron condor type candidate. That would be much more aggressive. The volatility is pretty low on Google after that earnings. So you're not getting good credits here, but that weakness is notable. There's no question.
No doubt.
Cisco has lost momentum. It was maybe the strongest stock that's $200 billion plus, CSCO. And that trend line violation, I got to get your take on this as a technical analyst. When the trend line's violated, how do you interpret that from a larger perspective? Because it wasn't going to hold on to that forever. Doesn't necessarily make it bearish. We only have one pivot low, right? But what's your read when that trend line fails?
It's a kind of a time frame pullback. Like, I think it just ends up being a bull pullback on the weekly time frame. But it is, been running real strong, really clean. You can see a double top out there, a break, so there's an M for murder, a break, and here's your pullback. Now, again, it's just violating a really aggressive trend. That's a really steep trend. Mm-hmm. And a lot of times these will drop back and start to develop a more moderate trend after it does a retracement. So I would look at this and say, you know what, from a weekly perspective, it's just going to be a nice looking bull pullback here. It may take a couple of weeks to set up, but I think there may be buying opportunities in there. You do have earnings coming out on the 13th, which
yeah, I agree with that. We got to look at all these big ones. They're really key right now. Amazon and Microsoft next. Look at these pullbacks developing. They're different than Cisco's pullback, in my opinion. This one's post earnings, first of all, and it's not as deep. Amazon obviously breaking below 1900. It was a notable thing. But what's your read?
Feels like I got a little downside risk here. You've got violating that minor trend kind of channel. It's some selling pressure. Pretty easy drop to 1800 if it starts selling. Not a lot standing in its way. But again, let me drop that one back to the daily. It's riding on the 20 period moving average, and it still could put in a bullish reversal signal and end up just being a pullback. So I'd like to see some upward confirmation for sure.
1.3% is not exactly a huge day, but those are some bigger red candles than we've seen in some time now. Still in an uptrend right in the 20. I agree with you. If it fails on this pivot, you've got some room down, maybe on a deeper pullback to that 50 or the 1800 mark. They're both going to be about that same location. Microsoft here, Noah, backfilling into the old gap point. Now, this is an interesting technical condition because you gapped out on earnings, dojied for 4 days. Now you have two strong, big red candles. Not a good look on the pullback. You don't want to have fat red candles coming back down on the pullback. Give me a read on this one.
Yeah, and you got a little uptick in volume yesterday. Today's partial volume. But yeah, heavy red candles on that. That's a lot of downward momentum. So that makes me not like the pullback as much. It still has a nice uptrend channel. It may come down to that trend channel. So, I don't see it stopping here at the gap. I see it coming deeper, and you need to see some candles shrinking before you have a lot of confidence in a setup on that. And the volume needs to taper off too, because that downward momentum, I don't like the retracements. I have a heavy downward momentum.
Yeah. One stock that from a NASDAQ perspective, I want to talk about with their earnings is Square, SQ. And interesting chart. We talked about it in pre-production, and even Coach Keith last Friday said that he was playing puts in front of the earnings on Square. That's a reversal, breaking below support on a red candle, and obviously the volume up on earnings. That's an ugly chart, Noah.
Yes, it is.
Yeah. Yes, do you play stuff like this when you're already down 8%, though? I mean, it's tough to chase that with a put option until you get further confirmation.
What I do is I take those intraday, and once it establishes that, daily high, daily low, it would have to take out the low. And then if it takes out the low, it becomes a momentum trade where you trail the stops, and you're just trying to see what it has left in it. Because a breakdown like that can run. When it clears a big support level, there's room for it to drop. There's another, support-ish zone at 65, and that's pretty close to today's low.
Yeah. RTY next. Move on to the small cap index, if you would. Let's keep working through the markets one at a time, breaking them down, breaking them down, breaking them down. And the Russell is neutral. Nothing to see here. Any additional comments?
Makes me happy.
I like cash flow, baby. I mean, the summer is for theta. There's no doubt about it. That RUT cash flow condor system, I mean, it's the nature of how that is built and why it's designed. It makes me happy as well. Cody, whenever you come in here and take your mic off, I think you got something to say. What's up, young man?
Oh, I'm waiting for you to move to the dollar. That's what I'm waiting for.
He's getting excited. All right, $DXY. Let's talk currencies here. Now, by the way, Matt is not here today, but I have got to give a huge shout out to Coach Matt. He nailed that pullback.
That's what I was going to say. Bring it down to the intraday chart, even where he talked about yesterday, wait for the secondary movement, because it's not. So the first movement was the downside after the rate actually came out.
And there's the
secondary movement is when it started moving to the upside. That's what he said to wait for. And if you did that, that's what that big green candle is.
Well, and if you follow him on Twitter, you also saw that because he posted that exact same chart on Twitter.
And yeah, he posted that same chart, and then he also posted gold, because we talked about how gold and the dollar are going to be inverse yesterday.
Same thing. I missed my gold trade. I went and bought puts and didn't get filled and bummed out.
But yeah, this rally, technical textbook, what it should have done. The Fed meeting just bet it.
That's right. I mean, and quite frankly, the euro dollar cross pair looks beautiful. You could have traded it in the Forex market as well. I'm looking at many of the cross pairs. Pound dollar cross pair does look good, Cody. I know that I see why you like that one today. Feels like you're catching a little cleaner entry on that. Yeah, if you're a Forex trader, there's a lot of opportunity here.
Yeah. So bring the British pound back out to the daily chart. You can just see it a little bit better how it did that retracement. And the reason it was behind, whereas the euro moved yesterday, and the reason the British pound waited until today to start moving was they had their monetary policy statement this morning.
Mm-hmm.
So when they voted to maintain theirs as well, so that still just leaves the US dollar at a better monetary position than the British pound. So now it's starting to trigger today. So this, if you miss the euro, you can play the British pound.
Yep. Exactly right. I mean, there's no doubt about it. There's always opportunity in currency. I love the New Zealand dollar setup yesterday. Now it's probably not the right entry point if you missed it yesterday. So you can find a cross pair that you can trade. You know, when the dollar rallies, it's going to impact all the commodities. And this is not the only reason why crude oil is down today, but crude oil is down 3.5%. And I've talked about this on the halftime report. The complexity of the pattern was clear to me, and it was still in an uptrend, and I still liked it. It still would have had a bullish rating. I don't know where I'm going to rank this now, Noah. It's holding 60, and it's only pulled back about 10%. Volatility in oil on the big picture, that's not a lot. We had an incredible run that was unsustainable. The problem with unsustainable runs is you don't know when they're going to end. Is this the end of that unsustainable run?
Sure feels like it, Tim. Big heavy candles, lots of downward momentum, head and shoulders reversal, violation of trend line. Starting to see it violate moving averages, crossing over. Got it rising 5,200 period moving average on that weekly chart or on the daily chart here.
Mm-hmm.
It's a big technical zone. Plus $60 is just a fat number. It's going to test 60. And if it breaks 60, more bearishness, but it's going to test that 60 hard.
Yeah. Dollar rally and inventories are the highest we've seen in 19 months. Obviously, supply considerations. You have continued fundamental issues here. The rally was not really fundamental in that regard. It was more technical and a snapback from the fourth quarter crash, obviously. Now, who knows? I mean, that 50's got to hold, 60's got to hold. And we easily could be talking about $70 crude oil at some point in the summer, Noah. But you've got some short-term weakness that is a concern. There's no question about it. Same thing on Brent and gasoline and heating oil, and natural gas is a beautiful bearish retracement here today. NG contract seasonally for natural gas when you're heading into the summertime, Noah. I know it was a weird market last year, but what do we expect here from NG?
Well, your consumption drops in the warmer months, and that's a nice looking bear retracement. I'd expect some downward movement in price.
Easily could. Yeah, I agree with that. I'm watching that one pretty close here as we're heading into the weekend. Move on to gold. You talked about it. Miss the trigger.
Well, I traded the what is it, not GDX, but GLD, and it gapped. This is just down smooth. It's looking kind of inverted cup and handle, descending triangle. 1275 is a big number. And I think it's got room to drop to that 200 period moving average, especially if the dollar's up.
We're seeing selling across all the commodities. Silver's looking pretty ugly here as well. Platinum, deeper pullback. Copper's probably moving bearish. Palladium's holding on a little bit here. Different, more complex chart, I would agree. But metals in general, they're moving down.
Yeah, that 1300 zone on palladium's that could be a big break.
Yeah. Dollar strengthening is not good for metals that are priced in dollars. There's no question about it. Last one here is Bitcoin. Give me a quick peek at the old crypto markets. And if you want to find something up today, it is Bitcoin. I'll tell you that. Holding on to 5K. And actually now we're getting above moving averages and riding that 20. I mean, Noah, interesting chart to say the least.
Well, if it breaks 6,000, I think you're going to see a resurgence of the Bitcoin mania.
Yeah. I don't know if you can get the same kind of mania, though.
No, you won't.
No, I just don't see that. But
you'll get those who are still. You'll get a lot of chatter from those who are still holding from the highs.
Correct. Yeah, I would agree with that. And guys, that is our
cheerleaders trying to get the asset value to go up.
That's right.
Tell your friends.
Hey, everybody, go out and buy Bitcoin because I'm still holding on to $19,000 price tag. Yeah, I'm sure there are people still bag holding there. Emotions in markets, it doesn't work in any market, especially markets that are very volatile. You got to trade your plan. There's no doubt about it. And Noah, that's our market analysis. One thing we're going to do here today on Theta Thursday is kind of pick a few for iron condors. Just give me a quick 2-minute overview of what an iron condor is. Assume that somebody out there is listening does not have any idea what the strategy is. What is an iron condor?
Well, an iron condor is a fancy word for selling some options for income and buying some options to cover your assets.
That's right. Yeah.
So you're selling for the cash flow. You sell out of the money options, out of the money call and out of the money put with high probability of expiring worthless. And then to limit your risk, you buy a higher strike on the call and a lower strike on the put, and that fixes your risk. You wind up with a net credit. And that net credit, that cash flow, I like to shoot for about 80% probability on those.
Mm-hmm.
You don't have to be too good at predicting the future if it just has to stay in the middle there.
And we're talking condors here today. Born 426. Congrats, Sam. There you go.
Hey, isn't it Cody's birthday too?
It is. Young man.
It is. And it feels like we should be.
I was going to try to avoid that one, but thanks, guys.
Yeah.
I think, man, if only we could have everybody on the Zoom meeting turning their mics on, that would be great. We could sing them happy birthday.
Yeah. First of all, I'm not singing you happy birthday. Maybe I will.
I don't expect you to. Please don't.
Happy birthday, Cody. It's an amazing thing. First of all, you're doing a great job. Everybody out there in the halftime crew, let's give him, make him blush a little bit. Just say happy birthday, Cody. How old are you, kid?
I forget. Let's see. 28.
How long you been doing this?
So I've been trading for about 3.5, 4 years, and been officially trading probably for 3 years now.
Yeah.
So when I say officially, I mean like with structure, with the plan, with the mentor, correctly trading.
Sure. I remember when you came out to Salt Lake and actually sat in Matt's office for mentorship. That was probably 2.5 years ago?
Yeah, I think it was.
About that. Yeah. And you've learned your, technicals and all those kind of things as you're approaching. Do you feel like you're developing an edge, and do you feel like you're starting to find a style that fits you?
Absolutely. And actually that's it's the part that I have to remind myself that I'm just seeing the pattern set up. And because when you see it and it's about to happen, you're getting excited, you still have to kind of hold back from that emotion from jumping the gun, or getting too aggressive and then it never actually triggering. Yeah. But when I do feel an edge in the fact that I can see patterns more than just a bullish retracement.
Correct.
Because, that's where most all beginners start, is that the only pattern they can see is a bullish retracement. But then once you start seeing some of the other ones and some of the other factors, and you start, seeing that technical confluency that Noah talks about, is that you see the edge and you're just like, oh my God, this is the best thing ever. And then, yeah, I definitely can feel an edge on the market, as well as the styles that I like, because I talk a lot about currency, but that's just because that's my active trading.
That's what you do every day to make sure that you don't get bored.
But
right?
My favorite theta strategy is actually an iron condor that we're about to talk about. And it's because of how consistent and probable they are.
Well, and I think it's really important to understand that depending on the account and the outcome and the desired goal, there are times where you day trade something like Forex, or there's times where you buy a put option on gold when it's coming down off dollar rally. But there's a lot of times where you just want cash flow, or you just want to have that IRA working the right way and picking up theta points or whatever it might be. Good portfolios are well balanced and they're well designed with certain strategies and certain techniques that fit the trader. And I got to tell you, Cody, you put the time in, this is not easy right away. And so your first 6 months or so, you just put study time in. You say your first year was mostly just for education. Now you're 3.5 years in, and this is a skill that you're going to use for the rest of your life. Far too many new traders, they come out out of the gun and they start trading live money before they're ready, and they risk live money before they're ready. And then they might have a bad experience when they're new. No, we've seen this, not just young people, but anybody, where people come out and just start pushing things out in the market before they know that they're good at it. Right.
Well, yeah, that's your Dunning-Kruger effect, or Kruger-Dunning effect. I can't remember whose name goes first in that, but that's the optimism bias, that you think you're better at this than you are when you start out, and your confidence and enthusiasm might exceed your skill set.
Oh, there was a chart I posted on Twitter about that, because it really is like, when you start out, everyone's confidence is really high, and then as you gain knowledge, your confidence decreases, because you always know that there's someone that knows more than you. And the actual true experts never have as much confidence as some of these very small beginners think they have.
It is a great day for birthdays. I got to make one note before we finish that thought, and I do want to go with that. Daniel Williams, Batman, loyal halftime crew, also his birthday here in the
Did you just
chat.
expose Batman's real identity?
He's
Exposed
his
himself
identity on his
before.
birthday.
Yes.
So
and my daughter,
really?
my 10-year-old daughter's birthday is today, Cody. My little Sammy.
Wow.
Yep.
Happy birthday
How
to her.
about that?
All right. So while we're on who else's birthday it is, it's also Dwayne Johnson's and Catherine the Great. So fun fact for you.
Dwayne the Rock Johnson.
Phenomenon.
Monster.
Weird statistical phenomenon. When the market, or no, sorry, you get a group of 30 people or more, the odds of having multiple people who share a birthday are exceedingly high. You got 365 days in the year, right? But once you get more than 30 people, you have like a 70% chance of people sharing a birthday. So how many people do we have here? You know, 70?
Well, there's 2. Yeah, we've got 70 people live and then 3 of us. So 70. There's 2 people here live that have the same birthday.
There you go.
Noah is a statistical ninja. I love it. Don't get into a math fight with Noah.
No. Get in a math fight with me, you'll win. It's just the conceptual stuff. I know a lot about like psychology and statistics, but actual math, none.
Yeah. Well, Cody, I mean, here's my question for you as we're having this conversation. You love condors. We're going to build like 2 or 3 of them right now. We'll just see how they go. But you didn't always trade condors, and you didn't always, know how to do any of this stuff, but you took it one step at a time and you built it. You also have friends that are your age that have tried this, but they don't put the time in you did. What advice do you give beginners? Like if somebody's out there watching this for the first time, you've gone through the process, you've gone through the education the last few years. They can probably more relate to you than me or Noah, because me and Noah are old dogs that did it 20 years ago, and I did it 15 years ago. So what about you? I mean, what advice would you give a brand new trader?
As annoying as it is, you need to have patience and take the higher probability, lower ROI, boring trades. And I really do mean that, because when I look back at my trading portfolio and where my losses were that ate everything up, it was when I was trying to be too smart, too quick, whereas all my more consistent wins were the boring, low ROI stocks. So until you can really understand all these different factors, economic events, moving averages, a couple different indicators, how they all relate to each other, all of the Greeks, because there is a lot that goes into it. And when you first start, touching the tip of the iceberg, you think that, oh yeah, well, obviously this is going to happen. I just know where the market's going to move tomorrow based on the pattern. Well, none of us know. What is it, off of the Wolf of Wall Street? We don't know whether it's going up, down, or in circles. No one actually knows, but if we know how to set up a trade that will trigger when the market does make up its mind, then that's how we can, profit off of that. So I would say take your time, and yes, your patience and your fear, greed, fear of missing out, it's all going to be weighing on you, and you have to control your emotions and just force yourself to follow the rules and be patient.
Yeah, I agree with that.
And also don't buy and hold triple leverage stocks long term.
No, you should not. Well, the triple X stocks, by the way, they have negative theta naturally built in. People don't understand it, especially inverted ones like UVXY. They're some of the worst products in the market. Yeah. People that like, in fact, I read a study once, Cody, bring up UVXY real quick, Noah. It's an interesting random thought, but I like it. If you put like 10 grand into UVXY 10 years ago, it'd be worth like 1 penny today, because they inverse split this thing over time and you lose from theta decay and fade, or maybe like $1 or something like that. It literally is worth like nothing because they just come down, 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 down when they're 3X inverted and they're volatility products. You got to know your product if you're going to invest and hold, which is why I also love knowing our strategy if you're going to trade them for cash flow. The condor is our topic today, Noah. We've got 10 minutes left. I want to build a couple of them. You had RTY up, which I love. We could easily just do a condor on the rut. Yeah. Nothing wrong with that. In fact, the rut is that common cash flow condors product. We have an entire video course and system at Tackle Trading on the RUT. Or we could pick an individual stock. Maybe we can pick one of both.
Let's pick an individual stock because I already have one on the rut.
Yep.
Not that I wouldn't do it on the RUTY, but I've got a couple on the rut already, so I don't want to have to mess around with that. So
sure. We were talking about a few in production. Cody, what's a stock you like condors on right now? He just took off actually. Noah, I'm going to give you a couple you can look at, and then we're going to pick one. Start with Netflix.
All right. Nice sideways chop, clearly defined support and resistance. This would be a great candidate.
33% implied volatility, which is higher than the average in the market, especially for stocks this size. The IV rank itself is not exactly great compared to where it's been historically, but your post earnings, you've also got neutrality. It does qualify some of the boxes for me. Take a look at Salesforce, CRM.
It's nice sideways chop.
It is chopping. What is that exact earnings date out there in late May? Because that'll determine it for me.
28th.
So we'd have 26 days. We could do a 26-day type condor potentially. 28th would be a week from, or exactly 4 weeks from Tuesday. So if we did the Friday expiration before, that is potentially going to qualify. We'll have to look at the numbers on it. What's your rule for DTE, Noah, for days till expiration?
I go between 2 weeks and 6 weeks usually. I'll even go up to 2 months depending on what instrument it is. But typically for a stock, I'm shooting for 30 days.
Boeing, BA, the nature of sideways consolidation here, but your volatility is lower. On CRM, you have implied volatility at 32%, Netflix at 33%. The credit on Boeing, I'm sure, will be a little less, but it's a pretty good pattern for it if you take everything else out of it, right?
Yeah. What's your favorite on those so far?
I'd say Netflix personally. Yeah. I like that one the best. No earnings, none of that. And I like the chop. I know it tried to break out. It's failed at every breakout it's had for 4 months. I don't know why we think it's going to break out now. And if it does, maybe it'll do it just because I just said that, by the way. Yes. Knock on wood. That's the way it works. Build me a condor on Netflix, if you would, and kind of walk through how we do these.
Okay. Well, condor, if we go for closest to 30 days, that would put me out towards May 31st.
Mm-hmm.
And then my personal rule for stocks, Tim, is I usually go for the delta around 15. I know a lot of traders go 25 or less. Some traders like the 20 or less.
Mm-hmm.
I usually go 15 or less. I've just learned over the years a conservative condor is probably one that wins.
Mm-hmm.
So I'd start out with probably a $5 spread, 345 by 340. There's lots of ways to build these. I always go with an easy template. And then I know I've started with the delta 15 on the put side. So you're selling that 345 put for the $3, and then you're turning around and buying the 340 for the $2.40 some odd cents you spend here.
Mm-hmm.
So you get to keep that 60-cent credit. And then we're going to do the same type thing out here with the calls. We're going to go out to 412.50 with the delta 15. In this case, I'd probably go to 410.17 because I want to do a $5 spread and I don't have the strike prices to accommodate. So 410 by 415 on the call side. And then you turn around and buy the 415.
Mm-hmm.
Nothing like scrolling through those to find the right strike. That gives you $1.05 credit, Tim, on a $5 spread. Hold on, let me change that up. 240. Okay. $1.38 credit on a $5 condor. What these expire on the 31st. So set that expiration out to the 31st. That's your probability cone. I like to set my price slices to the break-even point and drop them on the chart so I can get an eyeball on it.
Mm-hmm.
Before I do that, though, I need to get rid of the ones I've got. So let me go clear that drawing set. Oh, come on. Play nice.
While you're doing that, by the way, I'm running a scan for an alternative one. The numbers here actually look pretty good. I have kind of a rule for myself. I always like to run at least 2 or 3 before I pick one You know what I mean?
Yeah.
And I don't know why that is, but just mentally, I like to have a couple of things I can compare and contrast. Does that
you
make
got to compare and contrast. I think that's how you differentiate between a good one and a bad one.
Yeah.
So I like to get an eyeball on that. And that feels close on the put side, way far out on. Did I get that right? Did I miss a strike? 345 by 340. That seems really tight on the put side.
I think it's tighter than I would want for sure.
Yeah.
See, because you want to have that market maker expectation. And by the way, if you're out there in your halftime crew, you already know this. You're going to plug these numbers into the Tackle Theta research spreadsheet so that you know exactly what that MMM cushion is and the ATR buffer is and all that kind of stuff. What was the delta on that 345 put?
345 put. Let's see if I got that right. Delta was 15.
I would probably still go. Why don't we do this on Netflix? Let's take that 10 delta. Let's take a lower credit. I prefer cushion over. Yep.
So go down towards like 335.
Yeah.
Drop that 10 points.
In my opinion, out there, traders, I prefer cushion over credit. See,
Write
I think
that down. That's clever.
Yeah, I think far too many traders chase the profitability. They got to make so much money, X amount of money, and whatnot it is, but it makes it harder to trade that. That put side, I think there might have more inherent risk in it, and we're still getting $1.06 credit, lowering the net delta to about a 12 delta means we have, and write these numbers in the chat. Our expected pop would be about 85%. Put in 85% pop. And our ROI on this one is about 26% ROI against your margin. So put in 26% ROI. That's about right, Jonathan. That's exactly right. Chart cushion credit. I mean, the 3 C's of Condor trading. And if you add the Condor, it's the 4C system. All right. I just made something up there, Noah, but I like it.
I'm writing it down, actually. This is when you teach yourself stuff. So what's the 4C? We got chart cushion credit.
Condor chart cushion credit system, right? It's the way you think about it. It has to fit the chart first. You have to have enough cushion based on the volatility projections to be comfortable. And then you evaluate the credit and make a decision. And if all of them work, then you can do that trade.
I like it. CCCC.
Yep.
Chart cushion credit.
And you know what they say? C students rule the world, right?
That's true.
What was that 4th C you put in there, Noah?
Condor
chart cushion credit.
Okay.
Yeah. Listen, I mean, you're picking up 26% return on a 12 delta, 30 days out on a neutral condition in a market that's kind of now moving outside of earnings season. I have no idea if the trade will actually come in or not, but that's the kind of trade theta traders take. There's no doubt about it. What do you think, Noah?
I like it. Not an advertisement to buy or sell that Condor, but
interesting.
I might
give
look
me
at that
something
trade
to,
here in a second.
Yeah.
I'll be honest.
Probability. I like the range. That's fantastic. I like that with the adjustment on the bottom, Tim. I was going to mention. I love that got below the 200 period moving average.
All right, now I'm going to blow your mind right now. Okay.
Too late. You already did with the quadruple C.
I've got the 6 C's.
6 C's. Okay.
I do. Condor, chart, cushion, credit, compare, choices. Okay. Because you have to look at a couple more before you can make a decision, right?
Compare and contrast.
Compare, contrast, make a choice. I don't know, whatever it is we're doing here. I love it. I love Theta Thursday because Theta is the first way I found my edge as a trader, Noah. You know, I do a lot of Vega and Delta and all kinds of different things, but Theta is my old school way I approach markets, and I still use a lot of capital to generate Theta with. There's no doubt.
Well, it goes back to one of the things that I learned from Micah Brooks. He said, Noah, time is the only constant in the market.
Yep.
And that's true.
That's exactly right. And speaking of time, it is that time. We are wrapping up here. Cody, again, happy birthday. Earnings tomorrow. And let's take a look. We've got the SIBO coming out with earnings. Noble, Planet Fitness tonight, Gilead Pharmaceuticals, Fortinet, quite a few other ones. Always check your earnings, set your charts appropriately so that you can double check them. I will say this, and somebody in the chat help me out with this, put in the words stock report. The weekend stock report that Matt did was incredible. I think that Noah, your option report in March about Monty Python is maybe my favorite thing we've ever done at Tackle Trading because it was so much fun. But Matt's content last weekend was pretty awesome. If you have not seen the stock report, go back and watch it. If you haven't watched the video, go back and review it. If you just want a good technical refresher, bookmark that post and make sure you come back down. Cash flow condors, or not condors, the cash flow club tonight, 8:30 Eastern. And Noah, you had the lounge this morning. Kind of explain what you do in those lounges, because obviously the pacing, the timing, the nature of the content's different than what we do in the halftime report.
Oh yeah, it's a conversation. We get in and we talk, and hey, what are you guys looking at today? Anybody have a trade want to look at? We look at their trades. We discuss, ideas. I talk about adjustments. And we're just looking at what's on everybody's mind. And it's really more of an interactive environment. It's a lot of fun. And so for those who are there, we got a lot of regulars. We see a lot of new people. Between me and Mark, it's always interesting and fun.
I love it. Yeah, doing a great job with that. Cody, great job on the prep. Appreciate you. Everybody out there, halftime crew. If you're not already subscribed to the YouTube channel here, subscribe. Make sure you click the bell. Come and join us every day. If you haven't clicked the thumbs up yet, give me that one last thumbs up. And if you're watching this on replay, put something in the comment section below. We always love reading that stuff. Let us know what you're watching, what you're thinking. And we will see you guys tomorrow for Friday Fun Day. We are out.